All right, folks, buckle up. Imagine waking up on November 6th, 2025, and realizing Donald Trump is back in the Oval Office. How does that change everything for your investments? Are you betting on sunshine and roses? Think again. This isn't about politics. It's about your money. Are you truly prepared for the Trump 2.0 economic roller coaster? Because what worked before, it absolutely won't this time. Let's dive into the potential chaos and how to not just survive, but thrive. Okay, the buzz is all about the potential impact of a second Trump term on equity markets. We're not talking about a gentle breeze here. We're talking about a potential hurricane. The big question is, are investors truly pricing in the risks? The smart money is saying no. We're looking at potential trade wars ramping up, unpredictable tariff policies, and a potentially volatile geopolitical landscape. This isn't just theoretical. It's about real dollars and cents in your investment account. We're seeing analysts scrambling to revise their forecasts, and frankly, a lot of them are still in denial. Let's get real about what's at stake. Let's start with the tech sector. Remember how big tech soared under Trump 1.0? That might not be the case this time around. The article points to tech as being particularly vulnerable. Think about it. Tariffs on components, increased competition from overseas, and a potential regulatory crackdown. Suddenly, those sky-high valuations look a lot less secure. We're talking about a potential exodus from the tech sector, triggering a wider market correction. Don't just assume the FANG stocks are bulletproof. They're targets. And the S&P 500? Overvalued, especially in megacap tech. A negative catalyst could trigger a serious downturn. Are you diversified enough to weather that storm? This isn't fear-mongering. It's about being prepared. Remember the dot-com bubble? History doesn't repeat, but it often rhymes. Pay close attention to this. The current earnings season is flashing warning signs. Fewer companies are beating estimates. Tariff concerns are dominating earnings calls, and 2025 outlooks are being revised downward. This is a canary in the coal mine, folks. It means the fundamental drivers of stock prices are weakening. Companies are already bracing for impact, and they're telling you in their earnings reports. Are you listening? Are you adjusting your portfolio based on this real-time data? Or are you stuck in the past, relying on outdated assumptions? Don't be a deer in the headlights. Here's a hard truth. Your fancy investment models might be useless. They're often based on historical data and assumptions that simply don't apply to a Trump 2.0 world. We're talking about unprecedented trade policies, a rapidly changing macroeconomic landscape, and a level of political uncertainty that's off the charts. Relying on outdated models is like driving with your eyes closed. You need to adapt your strategies, stress test your portfolio against different scenarios, and be prepared to make quick decisions. Don't be a slave to your models. Be a smart, adaptable investor. Let's talk about the elephant in the room, a full-blown trade war. Trump's tariff policies could escalate quickly, disrupting global supply chains, increasing costs for businesses, and reducing demand for goods and services. This is the major business risk, and it's not being taken seriously enough by the market. Think about the impact on specific industries like the auto industry. Ford, GM, Caterpillar, these companies are in the crosshairs. Increased costs, reduced competitiveness, lower sales. It's a recipe for disaster. Are you overweight in these sectors? You need to reevaluate your exposure now. Higher inflation, higher interest rates, a massive federal deficit, and that's before we even factor in the impact of trade tensions. This is a dangerous cocktail that could lead to a slowdown in economic growth or even a recession. Corporate profits will take a hit, and stock prices will follow. Don't be fooled by short-term rallies. The underlying fundamentals are weakening. You need to be prepared for a period of lower returns and increased volatility. This isn't the time to be greedy. It's the time to be cautious. Here's a potential hidden danger. Asset managers' high exposure to equity futures leaves them with less dry powder to buy equities in the event of a market downturn. This means they'll have less ability to capitalize on opportunities and potentially exacerbate losses. Think about it. When the market crashes, who's going to step in and buy? If the big players are already maxed out, the downside could be much steeper. This is a systemic risk that's not being widely discussed, but it's something you need to be aware of. While the article doesn't explicitly mention geopolitical risks, Trump's policies are inherently unpredictable and can create instability in international relations. Think about potential conflicts in key regions, trade disputes with major partners, and a general erosion of global cooperation. These events can have a significant impact on businesses and financial markets. You need to factor in geopolitical risk when making investment decisions, and that means staying informed and being prepared to react quickly. Don't underestimate the power of a single tweet to send markets into a tailspin. Beyond the financial risks, let's talk about the ethical implications. Trump's mercurial approach to tariffs can be seen as lacking transparency, making it difficult for businesses and investors to make informed decisions. This creates an uneven playing field and undermines trust in the system. As investors, we have a responsibility to demand transparency and accountability from our leaders. We need to hold them accountable for the potential negative consequences of their policies. Trade wars and economic downturns have real-world consequences for ordinary people. Job losses, increased poverty, rising inequality. These are the human costs of reckless economic policies. As investors, we need to be aware of the social impact of our decisions and consider investing in companies that are committed to ethical and sustainable practices. We can't just focus on maximizing profits. We need to think about the broader impact on society. Asset managers have an ethical responsibility to act in the best interests of their clients. Failure to adequately assess and manage the risks associated with Trump's policies could be seen as a breach of this responsibility. If you're working with a financial advisor, ask them how they're preparing for a potential Trump 2.0 scenario. Are they taking these risks seriously? Are they providing you with a clear and transparent investment strategy? Don't be afraid to ask tough questions. Your financial future is at stake. Although not explicitly mentioned in the article, the potential for market manipulation exists if information regarding policy changes is leaked or used for personal gain. This is a serious concern that regulators need to be vigilant about. As investors, we need to be aware of the potential for insider trading and other forms of market manipulation, and we need to demand that regulators take action to protect the integrity of the markets. So, what's the new playbook for equity investors under a potential Trump 2.0? First, diversify your portfolio across different asset classes and geographies. Don't put all your eggs in one basket. Second, focus on companies with strong balance sheets and sustainable business models. Third, stay informed about policy changes and be prepared to react quickly. Fourth, consider hedging your portfolio against potential market downturns. And fifth, work with a financial advisor who understands these risks and can help you develop a personalized investment strategy. This isn't the time to be complacent. It's the time to be proactive. Look, a second Trump term presents significant risks for equity investors. The old playbook won't work. You need to be prepared for increased volatility, trade wars, and a potentially weaker economy. By understanding these risks and adapting your investment strategy, you can protect your portfolio and even capitalize on opportunities that arise. Don't let fear paralyze you. Take action now to prepare for the unexpected. Your financial future depends on it. So, what are your thoughts? Are you ready for Trump 2.0? Let me know in the comments below. And don't forget to like and subscribe for more insights on navigating the ever-changing world of finance. Thanks for watching.